Friday, the market sold off. The Dow Jones and all the major indexes for the US market sold off significantly. All right. And on Thursday, we talked about this, because it was going to be two ways. Either it says, inflation is starting cooling off, so we will not be as aggressive, and then the market would have, definitely, went the other route. But he said we are committed to fight these things over when it comes to inflation, and unfortunately, it's gonna be painful both for the consumers and for businesses. Well, I believe the market took it not as being factful as it should have been, because there might be a little bit of overreaction behind this, but there is some sort of truth also attached to it. But I want to see exactly at those facts, and what to look for when it comes to what's next for your money, for your investments. All right. So first off, why did Jerome Powell said that? This is kind of the two things that kind of struck me out of this speech. Well, the first thing is he's not wrong. He's not wrong because inflation is still sitting at very, very, very high levels. Even though, it broke down, it went down from 9.1 or 9.2 to 8.5% right now. It is still at a very high level. I mean, just look, even though gas prices decline a little bit, it is still kind of expensive based on what we used to be or where we used to be just 2 years ago. All right. And then food and a bunch of other stuff. So it is still going to be painful because until inflation goes back to 2 and 2.5%, which is usually where inflation should be for the economy to thrive, especially here in the US, some people are going to still struggle in order to make ends meet. And that is my understanding of what he meant by it's going to be hurtful. All right. And now another side of this is by increasing interest rate, which is pretty much what they need to do in order to bring inflation down. They have to somehow break the economy, like straightforward. They have to break the economy. Now, there is something to take this with, a grain of salt, because increasing interest rates definitely puts a big filter on the scope of people that are able to afford a house, especially the first-time buyers. If you're a second-time buyer, third-time buyer, then you can use the equity you already have in your previous houses, given the market strength that we're seeing right now. Because the truth is, inventories are coming back up in the market when it comes to the real estate aspect, market, but the prices are not decreasing at all. The prices are not decreasing. The sales price are decreasing, meaning the amount of houses being sold is decreasing. And number one part of it is because people want to see exactly how things go. Is it going to be a repeat of 2008? They're asking these things, but at the same time, prices are remaining high because of these, supply and demand unbalance. All right. And because of interest rate increasing and the market structure is going to put some people out of the real estate market for quite some time until inflation remains at 2%, when even lower, before they can start decreasing those interest rates in order to help people qualify again for a mortgage. All right. So that's how I see these two things really continue to hurt consumers. All right. Now, when it comes to businesses, the storyline is when you have people not really being in a space where they can consume as you wanted them consume, especially when it comes for items that are non-essentials, all right? Like your luxury item, your entertainment items, everything which is not gas, food, or healthcare related. Those are the non-essentials. Well, people are now shifting from goods to services, but even that, people are now trying to be really, really picky about what they decide to buy and what they decide they won't buy. So for businesses, it means lower profits, lower margins, and that may ultimately push them into not putting a lot of money to invest in the companies for the company to continue to grow, ultimately leading to maybe some additional layoffs or at least freezes in hiring. And that is also another thing that needs to happen in the economy for inflation to really backing off, because as long as we have a strong labor market, it's going to be tough for inflation to really go back down to those 2, even 3%. Why? Because if companies can't find people to work, then they can grow. Ultimately, they will, stop investing, and it leads to unemployment. All right. But those are the two things. And that's why I think people kind of tend to react on the negative, because it was a little bit shocking. Now, when you look at the underlying data that we got since the month of May, when it comes to the strength of the health of the economy, things are improving quite differently than what is being thrown out there in the mainstream media. Now, the thing is, when you look at what was disclosed on Friday, I'm talking about the CPE or the PCE. It's really the sentiment and the expectation from people when it comes to inflation. And for the last 3 months, that has been coming back down. So that's number one. Number two, the price of oil is still remaining under $95 a barrel, which is somehow manageable, all right? And people, as I mentioned earlier, people are really selective when it comes to what to buy and what not to buy. So it will kind of give that incentive, that insights that, people are not going into spiral spending money like it's crazy. Now, when I add to those things, it tells me that the Federal Reserve is going to continue to be looking for those numbers, because 1 month of inflation declining is not enough. And nobody should expect, that to be enough for them to start backing off. But what do we want? Inflation is the number one thing causing risk in the stock market and in the economy. And if the Fed is not committed to see these things and fight these things, it's not going to be sustainable, and we're going to be in a much more worse scenario down the road. So people have just to be looking at those indicators as we get into September, October, November. But prior to that, it's gonna be, like I mentioned, a patience game, literally patience game, to see exactly how things are ongoing. But as I mentioned, for me, I think this sell-off might be pretty well bought, like in a quick manner. But I wouldn't be surprised if on Monday the market gained, or the Dow Jones, for example, gained 500%, like half the points it lost on Friday, which is a pretty, decent scenario. But at the same time, people can also decide to stay, on the sidelines with the money, just to see how things unfold a little bit, because again, the Fed is meeting in September, and we are 3 days away from September, so nobody knows exactly. But yeah, that's the status. All right, that's the status. Now we're gonna talk more into what to do with your money in a separate video, because I want to keep this short. So make sure you follow that. If you're not subscribed to the channel, please consider this to be a reason for you to subscribe, so that you won't miss that video. And if you had some value in this, please consider giving me a like. I see you in the next one, folks.